Hi guys, welcome to my YouTube channel. In today's video, we're gonna talk about the different candlestick patterns and try to understand the story behind each candle. With this knowledge, it can help us to get a grasp of the market movement and further understand the reason behind each move. But first, we need to familiarize ourselves with some necessary terms. So the first one is the bull market. So what is this bull market? In order to understand what is a bull market, we need to answer 4 questions. These are what, who, when, and where. First is what. So what is this bull market? Simplest term, a bullish market is equals to price going up. So when we say a market is bullish, this means that the value of an asset is increasing continuously. Now, who are considered as the bulls? The term bull refers to the buyers of an asset. They are the reason for the increase in price of a coin or an asset. The higher the demand, the lower the supply, makes the value of an asset to increase. Now, when can we say that a market is bullish? The definition of when a market is considered bullish varies. There are a lot of definitions and factors to consider, but the most common is that a market is considered bullish if there is a sustained period of time where price continuously rise up or increase. This might be in the range of months and even years. There are sudden pumps which may take days and you may still consider them as a bullish market or a bullish trend. But then, the real bullish market lasts for months and years. It's just that these sudden pumps or increase that last for days or sometimes a week, they are just a short-term bullish market. And lastly, where does this term bulls or bullish came from? It came from the term itself, bull, which is the animal. So metaphorically speaking, a bullish trend or market refers to how a bull attacks. So, diba when a bull attack, it thrusts his horn upward. So, yung way of attacking niya is pataas. Therefore, it is a metaphor for the bullish, which is pataas. Okay? Now, the second one is the bear market. So, what is a bear market? So, in terms of bear market naman, it is the total opposite of everything I've said with bull market. So, same with bull market, we have to answer the 4 questions: what, who, when, and where. So, first one is, what is bear market? In simplest term, a bear market is equal to price going down, meaning the price of an asset is decreasing continuously. Now, who are these considered bears? The term bear refers to the sellers of an asset. They are the reason why the value of a coin or an asset decreases. The lower the demand, the higher the supply, makes the value of an asset to decrease. Now, when can we consider that a market is bearish? Now, this also varies. But the most common factor is that a market is bearish if there is a sustained period of time where price continuously goes down. So same din with bull market, it might be in the range of months and even years. And again, if there are sudden pumps, meron din namang mga sudden dumps, which may took days or a week, and they are also still considered bearish market or bearish trend. But then, a real bearish market lasts for months and even years. And those sudden dumps are just short-term bearish market. Now lastly, where does this term bearish or bear market came from? It came from the term itself, the bear, which is also the animal. So metaphorically speaking, a bearish trend or market refers to how a bear attacks. So, diba, when a bear attacks, they swipe their claws down, meaning pababa. Therefore, a bearish market or a bearish trend is equals to a downtrend. Okay? Now that we have understood the definition and difference between the bulls and the bears, we are now ready to go to candlesticks. Here are samples of candlesticks. The green ones are called the bullish candlesticks, while the red ones are the bearish candlesticks. Now, there are two different parts of candlestick. The first one is the body, and the second one are the wicks. Now, the wick and the body also has different labels. They are called the OHLC, or the open, high, low, and close. Again, open, high, low, and close. Now, to further understand this, let's go to the actual chart. Now, we're here in trading view. Technically, candlesticks are representation of price movement over a certain period of time. So, let's say nasa 1 hour time frame tayo. Each candlestick here in the 1 hour time frame, ang nire-represent niya ay yung galaw ng price over that certain 1 hour period. Kung nasa 4 hour time frame naman tayo, each candlestick represents the price movement within a 4 hour time frame. So again, bawat isang candlestick here represents a 4 hour period. So 4 hours, 4 hours, 4 hours. So kung 1 minute, 1 minute din, 1 minute, 1 minute, 1 minute. Okay? For this example, punta tayo sa daily time frame. Now, going back to OHLC, if you want to see the OHLC value for a certain candlestick, you may drag your mouse over it. On the upper left side corner of the chart, you will see the OHLC value for that specific candlestick. Let's say for this example, let's use this one candlestick. So after the previous candlestick close at the value of 1.4045, technically the next candlestick will open with the same value. Now, at some point within the daily time frame, the price was pushed by the bulls, reaching the value of 1.4955. But bears came in and pushed back the price, going to the price of 1.3815. Now, hindi naman basta-basta nagpatalo ang ating mga bulls. So, they push back until the end of the daily candlestick, reaching the value of 1.4615 as the closing price. And these 4 labels completes our OHLC label. Okay? Now, at some point, you will encounter candlesticks with little or no body at all. These candlesticks are called the doji candlesticks. This means that the price open and close at the same level or very near the same level, which is the reason why there is a little or no body at all. Now, here are other candlestick patterns you'll encounter in your trading journey. Don't worry kasi you don't need to memorize each candlesticks and their names as long as you understand the context behind each candlestick in order for you to understand and anticipate the market movement. But here are some of the most important candlestick patterns you should familiarize yourself with. The first is the reversal candlestick patterns. Now, let's go first with the hammer and the shooting star. Now, what does this two pattern means? As for the hammer, this means that when the market opened, yung mga sellers ang unang nag-take over na market, which causes for the price to go lower. Then after that, nagkaroon ng strong buying pressure, which pushed the price higher. The buying pressure was so strong kaya it almost close to the highest point it can reach. In short, yung mga bulls or buyers won this battle. So opposite naman when it comes to the shooting star. So when the market opened, the buyers are the first one to take over the market, causing the price to push higher. Then after that, nagkaroon ng strong selling pressure, which pushed the price lower. Now, the selling pressure was so strong kaya it almost closed to the lowest point it can reach. Okay? Now, for the second one, the bullish and bearish engulfing pattern. As for the bullish engulfing, Sa first candle, sellers are ang may control ng market. But as you can see on the second candle, strong buying pressure stepped in and pushed the price higher. So this means that the buyers have won the battle. As a reference, bullish engulfing pattern tells us that na-overpowered ng mga buyers ang sellers, which is why they are now the ones in control of the market. So opposite naman when it comes to bearish engulfing. Sa first candle, buyers ang may control ng market, but on the second candle, a strong selling pressure stepped in and pushed the price lower. So this means that the sellers won this battle. So lastly, the morning and evening star. As for the morning star, you can see that on the first candle, the sellers are fully in control. Then the second candle came, nagkaroon ng indecision sa market, so kumbaga nagkaroon ng balance sa buying and selling pressure, which is why it resulted sa pagkakaroon ng maliit na body and longer wick. Then on the third candlestick, the buyers took control of the market and pushed the price to close higher. So in short, the sellers are exhausted and the buyers momentarily took control of the market. So again, opposite naman when it comes to the evening star. In terms of the color for the middle candle naman, when it comes to morning or evening star, it doesn't matter. Whether maging red siya or green, still means that it's indecisive. Okay? So what matters is the second candle after the middle candle. So, ano bang importance? Bakit kailangan natin malaman at maintindihan tong mga reversal candlestick patterns na to? That's because these reversal candlestick patterns can give you an entry or exit signal for your trades. If you're looking for the right entry, one of the things you have to consider is to look out for one of these patterns. If you're entering a long position, you have to wait and look for a hammer, bullish engulfing, or a morning star to add as confirmation for your entry. Opposite naman when you're trying to enter a short position. So what you're looking out for as a confirmation is the shooting star, bearish engulfing, or the evening star naman. But again, you also have to consider other factors aside from these patterns. Okay? The next one is the continuation pattern. So, continuation pattern naman means that there is a possibility that the current market trend might still continue. So, if you're already in a trade and then you see this kind of pattern, better to hold for it a little longer kasi there's a possibility na mag-continue pa yung trend niya. On the other hand, if you do not have a trade, you can also use this pattern for a potential entry. But you have to consider the size of the candle. So later on, we'll tackle more about the size of the candle and what does it mean. Going back, both of these patterns, if you are using it to enter a trade, it is best if you see this pattern at the start of a trend. Just like for this example. So here, the 3 black crows was formed right after the evening star. Therefore, another confirmation for a good entry if you are trading a short position. So, for this example, with the 3 white soldiers, it formed right after the reversal pattern, morning star, which adds confirmation for a good entry for a long position or an exit signal if you're in a short position trade. So, all good? Don't worry, you don't need to be overwhelmed with all of these candlestick patterns. As I mentioned earlier, you don't need to memorize them one by one. You just need to fully understand the context behind each candle. Now, in order to understand any candlestick patterns without actually memorizing each and every one of them, you have to ask yourself these following questions. So the first one is, where did the price close relative to the range? So saan ba siya mas malapit nag-close? And who is in control? So let's take a look with these examples. So in the first example, as the market opened, the buyers took control of the market. But at the almost end, nagkaroon tayo ng price rejection. So in order to know who is still in control, you have to ask, saan ba siya nag-close malapit? Was it strong enough to push back yung opposite team? So in this example, saan siya malapit nag-close? Sa high. Therefore, in terms of closing range, buyers won. Now, there was a price rejection. But, was it strong enough to push back the opposite team? In this example, no. It didn't even manage to push back at the half of the current candle. So, another point for the buyers. So, all in all, the buyers are still in control. Now, let's go to the second example. As the market opened, buyers took control of the market. But, it was pushed back by a strong selling pressure that results to a strong price rejection. So, in this example, where did the candle close? Near the low. Therefore, it's a point for our sellers. Was the price rejection strong enough? Yes. Therefore, even though it is a green candle, we can see that the sellers mostly took control of the market. Another question to ask is, what's the size of the candlestick relative to the previous ones? So what does this mean? This question will help you identify kung meron bang strong pressure behind the candle move. So you have to compare the size of the current candle to the previous candlesticks. Kung mas mataas or mas malaki ang current candle than the previous ones, that means there is a stronger pressure. So let's take a look at this example. So here, you will see that the size of the current candle is almost the same with the previous ones. Therefore, merong tendency that a sideways move or an indecision might take place after. So let's see how it will play. So the market moved in the same direction, which is sideways, with the same strength of the previous candles. Now, let's go to the next example. You'll see that the current candle has a larger size compared to the previous ones. Another thing is that it also formed a 3 white soldiers pattern, which means that there is a sign of strength for the movement. Therefore, we can assume that a big market movement might take place after. Now, let's see how this plays out. As you can see, the market had a big increase in price, which led to 370.89% increase. Now, to end this video, I'll be leaving you with these lessons. The first one. The thing is, there is always a story behind every candle. Once you fully understood all of this, you will be able to read and understand the market movement better. But again, do not just rely on the candlestick patterns. You may use them as an additional confirmation, but never fully rely on it. And lastly, do not trade candlestick patterns in isolation. You also have to consider other factors that could affect the market movement, such as the market structure, support and resistance levels, trend line, chart patterns, etc. Okay? So that's all for this video. See you on the next video.